Hi, just a quick video about my new free ebook of technical analysis exposed, why most technical analysis traders lose. It's actually a rewrite of the first book that I wrote, and I think it's interesting to go back to what happened with the publication process of that book and why I was so keen that eventually I was going to rewrite it in my style. So when I first arrived in Australia, I'd only ever been in the professional industry in London, so working either trading for investment banks or on the live floor in the pit trading days on the floor. When I moved to Australia, was the first time I saw the retail trading industry. I saw some online content, some magazines aimed at retail traders, and I read through them, and literally nothing in there resonated with what I'd seen in the industry. And and everything in those magazines was all based on technical analysis in some form, whether it was chart patterns, candlesticks, GAN, or whatever. It was all based on some form of technical analysis. Now, in my time in the banks, I'd never used it, and I don't think I ever worked with any traders who used that kind of trend lines and chart patterns to make decisions. So I figured that it would be worth investigating further. So I spent about 2 years investigating technical analysis. I contacted institutions, researchers, organizations all around the world, and I got dozens and dozens of studies into many aspects of technical analysis. And from that, I added some of my own thoughts, and I wrote the basis, or the manuscript behind the first book. And then it was an interesting process about trying to get it released. So there were really at the time, and I suppose most of the time, there's two or three major publishers for trading books. Now, it turns out most of them had heard that I was doing this because I was contacting people around the industry that word was getting out that that I was working on this. So I spoke to one of the big publishers first and said, look, I've got this manuscript, and they said, by all means send it in, and they read it, and it was really interesting what the response was. Basically, they said that they couldn't publish the book because essentially all the other books that they published for retail traders on trading were technical analysis. And their view was that if people agreed with my view in this book, because it painted technical analysis in such a bad light, that if people accepted this as being correct, that they wouldn't sell any of their other books. So they didn't take it for that reason, which I found incredible. Because here really I had this quite controversial book here. A book that basically said that all this other stuff out there was junk. But they wouldn't take it because there was too much of potential profit loss across the other books. Then I got into contact with another major publisher who, without even seeing the manuscript, they'd heard about what I'd done. They decided to take it without even seeing it. They said, "Yeah, we'll take it. We'll print it." Which I thought was a little bit odd, but I was obviously happy at the time. I wanted it published and wanted it published by a major publisher. The editing process went fine. They didn't want to change anything. They did want me to add some sections, which I did towards the end. They wanted a little bit more positivity out there. So my book was really explaining all the problems of technical analysis. They also wanted me to build on that and show some examples of how we could improve. So I did a bit of that as well. It wasn't really what I was trying to get across, but that was fine. I did that. But the editing process, generally, they allowed me to write what I wanted. There wasn't any changes. They didn't challenge any of the statements that I made. So that was fine. But then it came to selecting a title for the book. Now, I was, thinking that, the way to get publicity for this book, the way to get it out there was to push the controversial aspect. I mean, here I was, I'd got dozens and dozens of studies, and the evidence was clear. Technical analysis, realistically, it's unreliable, hugely unreliable, doesn't really have any basis to it. And the vast majority of people that use it will lose. The facts were clear. So I thought a title such as, Technical Analysis Exposed, or The Truth About Technical Analysis would be where we were going to go on this. But the publisher was completely the opposite. They wanted something bland, something that really, we had this really quite stern argument for a number of weeks, and ultimately in the contract they had the choice. So they came up with the title, and I have it here, was Technical Analysis and the Active Trader. Now, I found that a bit misleading, and I know there's been some comments on some of the reviews of the book where people say, oh, it's not what I thought, and I'm not surprised. And I said that at the time. I was disappointed because, I have some reputational risk here that people read this book thinking it's about how technical analysis, you know, how you can use it as an active trader. It's got nothing about that. This book tells you how rubbish technical analysis is. So I was really angry at that. I didn't like that. And then some of the subtitles in the little bit below, there's one that says improves your technical analysis for better trading. Again, it doesn't do that. I was really angry with that. But I wanted to understand I had no say on that. I put my argument that I didn't agree with it, but ultimately on all that stuff, the marketing and that, the publishers went with it. They also set a very high price for it. It was 65 US dollars, which is high for a trading book. And you know, here in Australia, it was equivalent to about 100 Australian dollars. That's a ridiculously high price. But by the same token, the publisher knew that this book was going to go into libraries, universities were going to take it. So there was a guaranteed, number of sales anyway for this book because of the standard and style. So it did go into universities around the world, libraries, and all that take a copy too. So ultimately the book, didn't sell anywhere near what I wanted. And also interestingly, then I was contacted, or I think they put me in touch with a publishing a publicist, someone who works with authors to get the message out, get on television, radio, and all that kind of stuff in the media. And so we contacted, and it was interesting because he said, I've read about what your book's about, I understand what you've done. He said, there's no way we're going to get any publicity for this book. And he said, I don't want to lead you up a path here. I don't want you to pay for something you're not going to get. But he said, the financial media, particularly in the US, the financial media, the newspapers, the television or whatever, are not going to touch this book. You're not going to get any publicity for it. Which I kind of had a feeling might be the case. But to hear that straight out, you're going to get no publicity, was obviously again a little bit hard, because I figure I've got this controversial view out here, but one that's backed by huge amounts of research. Surely people need to hear it and want to hear it. But his view, and he was right, the industry didn't want it out there, which I get a lot with with some of the things I do. So ultimately sales of the book were never huge. Now the publisher only has the rights for X amount of years. I actually got the rights back to this book a few years ago, and then decided at some point I would rewrite it, and that's what I've done now. So I've now rewritten the book in the way that I want it to go out. So the title is Technical Analysis Exposed: Why Most Technical Analysis Traders Lose. And I've found more studies. So obviously that was the first book was written in 2005-06. I found more studies since then. So what I've done with the book is to approach TA from a number of perspectives, starting with the fact that it's obviously very popular. So we have a look at why is it popular? Why are so many people using it? Because some people are going to say, well, if it was so terrible, if it didn't work, it wouldn't be popular. Or I explain why it can be plausible even though it's not successful or reliable. So in the early part of the book, I'm explaining that, why it looks plausible, why you're going to be drawn into it as a trader, even though the vast majority of traders that use it are going to lose. So that's the first part of the book. I have to explain that side of things. Then I start to put some of my own questions in there. These are things that I've seen from markets, how markets actually work, and explain how it completely contradicts the assumptions and beliefs behind technical analysis. It's not enough just to say, oh, X person makes money out of TA, therefore it wins, or this person draws trend lines and he makes money, therefore drawing trend lines must work. That's not enough. If the ultimate assumption behind drawing those lines or using those patterns is wrong, then I'm never going to want to use it. And one of the things you have to understand is a survivorship bias, that there might be 1,000 people doing that and 2 of them might be successful, and they're the ones that you're going to see. That survivorship bias is real, and I explain that here as well. And also there's that law of numbers, right? If I give a rubbish trading tool to 5,000 people, they're not all going to fail. Some of them just by luck are going to make money, and they're the ones you're going to see. And of course they're not going to say they were the lucky ones, they're going to say that they had some sort of skill. So I wanted to put this information out there, put the assumptions out there, and say how it contradicts what really happens in markets and what I've really seen happen. Then we look at the studies. Now I've used dozens of studies, and at the end of the book there's a bibliography. You can see all the dozens of studies I've used. Now when I see people present arguments for why we should use chart patterns or whatever, I see very little evidence, that real evidence, independent evidence for why it's supposedly successful and why we should use it. I have shown all the evidence here in my book, and numerous studies. I think I've studied technical analysis more than most people that use it. And the studies are clear. I mean, when you look at them, they study thousands of technical tools over 100 years plus of data. There's lots of them. They're rigorously tested as well, to be tested for data snooping and tested for risk management as well, or for risk adjustment. Because it's one thing to say, oh yeah, I can make money using this, but it's another thing, if you're taking on a huge amount of risk to make that money, then it's not really edge that you have, okay? You're taking risk. It's a difference between having real edge and making money because you're accepting risk. So the studies do all that, they account for all that, and the studies are clear. I mean, and one of the things I want to do is these studies are sort of stuck in academia or wherever they are at the research institutes, and I want to put it out there so that you can see that and understand that as well. So we have, you know, what I see how markets work, how that, you know, that how that challenges the assumptions of technical analysis. Then we look at the studies, and the studies actually back up when we also analyze not just the fact that they show that TA doesn't work, but actually we can see from some of the studies what the failings are, and they match up to what I suggest in the early chapters. The failings of technical analysis, the flaws in it, and there are substantial flaws in the assumptions behind it, and they show up in the studies. So you know, that can be seen. So it's not just me saying I think that, you know, this doesn't work in this type of market compared to that market. The studies show that. So that was another really interesting aspect. We then move on to look at behavioral finance. I include that because I want to show why we look for patterns, why we look for trend lines. Behavioral finance is clear, right? That humans like to look for shortcuts when they make decisions like trading. And patterns is one of the biggest shortcuts that humans use, not just in trading, but in any form of decision making. And I'm really finding it interesting. There are a number of people out there who claim to be, you know, trading psychologists and things like that. And they came to be behavioral finance experts in the, you know, in the trading world, yet they use technical analysis and chart patterns. I find that incredible, because the reality is it's one of the first, when we study behavioral finance, one of the first flaws, one of the first heuristics we look at is the representative bias, which is where people look for patterns. And it's something that we're told is something we must avoid. So I find that really interesting that people that say they're knowledgeable on behavioral finance then use trend lines and chart patterns, because the two are incompatible. So we study why, you know, I show in the book why we look for these patterns, why we're looking for shortcuts as well, which helps to explain again about why people are using these chart patterns and why some people are drawn to it, where some people like me, who are not someone that generally looks for patterns in life, I look at the chart patterns and just think, don't get that, why would I want to be looking at that? Then following on in the book, I then look at the actual assumptions themselves behind technical analysis, and I'm pretty confident that nowadays that a lot of the people out there who are technical analysts don't actually know what the assumptions behind their, you know, their form of analysis are. Go back 20-30 years to people that I learned from, and I did study technical analysis under two very well-known technical analysts. They understood, you know, the assumptions behind it, and they believed them to be correct. Now, most of us who have worked, particularly if you've worked as a market maker in that type of capacity, we look at the assumptions behind technical analysis and just think that that's not how markets work. So I put out there as well, what are the assumptions and why I don't think that they're accurate. I finished the new book with an example, and it's actually the same example I used in the first book because it's just such a good, clear example of the failings of technical analysis and why the methods and the ideas that I put forward are so much stronger. And so that last example really in itself, and one reviewer of the first book said that, you know, that this one example just demolishes most of what's behind technical analysis. So I think it's a really good example. If anybody's in any doubt, then, you know, I think that will clear it up. But throughout the book, essentially what I've done is not to give one reason or two reasons. I've outlined a whole case, a whole, you know, presented to you a whole case, a whole reasoning behind, you know, numbers of reasons why technical analysis has flaws, why it's unreliable, why you shouldn't be using it. And, you know, and because I'm so keen for traders to see this now, I really want traders to understand this and to question everything you've been told, because almost all of the education industry out there for retail traders is technical analysis based, right? Almost all of it. We all know that. And I want you to understand what the questions you need to ask the people out there that are saying that to you, and I want you to understand what those flaws are. Because, you know, even if you don't always accept things that I'm saying, and I'm not saying you should always accept things like that, but it should help you to ask the right questions. It should help you to try and frame your trading in different ways, and hopefully lead you into a path of, you know, learning what you really do need to understand as traders. So, but I think at the very least, you're going to question, hopefully, a lot of things that you've been told before, and that's right. You should be questioning everything in this industry. We have a very high failure rate, too high and that hasn't improved in the last 20 years. If you look at, and the number of technical traders has increased massively, the number of traders has increased massively, but the success rate hasn't. So there's absolutely no evidence that this new wave of all these technical analysis traders are suddenly, we've increased the success rate of traders. It's not true. So I'm really keen for traders to understand this, to learn this, to hear these statements. If you disagree, I'm always happy to take questions about it, and you can put them in this thread. If you want the book, it's a free ebook. If you go onto my website, scalpfutures.com or organicfinancialgroup.com, and you subscribe to my mail list, then I'll send you a free copy of the book so you can have a read through it. So I want to give it out for free because I just want traders to hear this. So I hope you've enjoyed the video. I hope more that you enjoy the book, that you contact me and get that ebook and enjoy it. And I think it's going to challenge, and for some of you it's also you're going to get some light bulb moments, think, yeah, that's why these trades are failing, that's why I haven't been successful, because there are deep flaws in the methods behind TA, and the reality is that probably most of you even are using technical analysis. So as I say, I hope you come and get the book, and please let me know your comments if you've read it too. Thanks.